It's great to have your company for the weekly this Friday, the 16th of April. I'm Jessica Amir, a market analyst here with Bell Direct. Well, the Aussie share market looks like it's getting ready to rumble and potentially knock the top off the previous all-time high over the next week if momentum continues. On Thursday, the market hit a new 13-month high after posting gains in 8 out of the last 10 trading days, and now is just 1.5% of a puff from climbing over that all-time high that we hit on the 20th of Feb 2020. But not all sectors join in on the party this week. The tech sector up the most again, stretching further out of its 1-month bear market because bond yields fell from their recent peak, making tech stocks more attractive. While utilities fell the most because investors locked in recent utility sector profits and fund managers made quarterly rebalances too. But for the most part, investors have been buying into both growth and value stocks alike because the economy produced a trifecta of better than expected economic news, which further supports share market growth. So firstly, we saw the Australian unemployment rate fall to 5.6%. That's a lower rate than expected because a record number of Aussies are now holding down jobs. Secondly, consumer confidence rose far more than expected to an 11-year high. And thirdly, business conditions roared to a record because business profits and future orders surged. Now looking at the leaderboard, the top 200, the ASX 200, iron ore giant Mineral Resources, MIN, were a standout, rising 10%. That's because a couple of reasons. Firstly, the iron ore price jumped back to a 9.5-year high, and Mineral Resources also benefited from the lithium price rising to a 3-year high. Importantly, MIN is also increasingly pivoting to lithium. Now, in the quarter, Mineral Resources shipped 50% more iron ore and spodumene, which contains lithium, than the same time last quarter. And JP Morgan, Macquarie and Citi all came out upgrading MIN on the back of a brighter outlook. Macquarie, for instance, rose Mineral Resources share price target by 22% to $61. Meanwhile, Whitehaven Coal WHC, their shares went the other way, falling 14% because the coal company came out downgrading annual output after being affected by heavy rains in New South Wales. But over the year, though, Citi thinks that Whitehaven, WHC, their shares will grow almost 30%. And that's why Citi restamped WHC as a buy. Moving to the largest 500 stocks, a little known cloud call recording company business called Corp, DUB is the ticker code. They collaborated with an international heavyweight, Zoom. That sent Dubber shares up 25%. Now, this benefits users of Zoom because now they can record Zoom calls, ingest them on Dubber, and then have their video converted to a transcript. Now, shifting to next week, there's a couple of key considerations, guys and girls. Firstly, it's worthwhile looking at your portfolio because many fund managers are continuing to adjust their asset allocations, expecting strong share price growth over the next year. Now, research house FactSet is predicting the S&P 500 would lift 10% in the year ahead, expecting energy to rise the most, 16%, followed by healthcare up 14%, and followed by tech, tipping it'll rise 12%. Now, Morgan Stanley noted that it's been increasing its growth exposure, buying more tech and semiconductor companies, and also buying cyclicals, mining, industrials, and financials. Also of note, Morgan Stanley says that despite bond yields rising sharply in Australia and the US, bond yields will continue to steadily increase from here. However, it doesn't see much risk in tech, given official interest rates will be kept low. Secondly, don't forget US quarterly confession season continues and earnings are expected to grow 25%. Now, despite this, and that earnings drives share price growth traditionally, Citi says it's a little bit uncomfortable because the S&P 500 could now be in bubble territory. And we all know what happens to bubbles. Now, this chart from 2011 simply illustrates when price growth surpasses earnings per share growth, the market tended to traditionally pull back. So with this in mind, investors may want to either choose to go long and take a long-term view or keep some money on the sidelines and average in if prices do pull back. Lastly, another consideration, I always like to look at the most traded stocks across our business to keep up with the Joneses and see if I can spot an interesting company that's in a growing industry and has got growing revenue and or cash flows and good potential. Now at Bell Direct, some of the most traded stocks from this week included machine learning company BrainChip, BRN. Their shares rose about 7% to 57.5 cents on kicking off production of their processing chip for AI devices. Magnetite Mines, MGT, also saw a lot of trade, seeing their shares jump 51%. Pushing MGT shares further into a technical share price breakout because the company is doing pretty well from the iron ore price rebound. And DeLorean Corporation, DEL, also saw a lot of buy orders, jet packing their shares up 40% after the renewable energy company listed on the ASX this week. And lastly, Zip, Z1P, they pretty much dominated headlines for a couple of important reasons. Revenue, merchants and customers all grew 20% or thereabouts in the quarter as the business continues to grow in the US and announce it's launching into Canada and the Philippines. Citi then stamped Zip as a buy with an $11.30 target, but after that the company announced a capital raise and the co-founders announced they're taking some money off the table. But looking at the technical indicators, they support Citi's view on further share price growth. So all in all, there's plenty to consider for your investment portfolio. That's the weekly. I'm Jessica Amir with Bell Direct, but from all of us, have a very happy and safe weekend.